it be in the next quarters and rest of the 9 months for the 2024. Let's start the presentation slides. Sorry. So let's start with the introduction of the my presentation. When we look at uh, the the Japanese index and its performance, this is the year-to-date return of the year-to-date price change of the topics and Nikkei 225. It seems that the Nikkei 225 exceed the record price of the uh, record price in the 1989 December 29. It was 38,915, but it's exceeding in the March, exceeding in the mid of the February, and then tap to the record, another record high at the March 21st of the 2024. Yet the topics is still under the record high, and it's almost it's record high of the 2024 at the at the almost equivalent date of the Nikkei, when Nikkei 225 tapped to the record high. Why this difference happened, I will explain later. And JPY first weakened as rate gap widened. Rate gap in the interest rate gap between the US and Japan. You can see that in the most nearest state, the Japanese yen is against the 155 US, near to the $155 US dollar in dollar term, and also weakening against the Singapore dollar. We are more conservative about the depreciation when we invest in the Japanese stock and other assets. So the momentum on Nikkei 225 was that the positive AI technology perspective driven by NVIDIA and TSMC, the Nikkei 225 is composed of a lot of the semiconductor-related industries, and its index weight is bigger than the topics. And the weakening of Japanese yen is explained by the continuation of quantitative easing, and also this weakened JPY attractive in USD term. The coincidence of NVIDIA DTC, this is what kind of the conference call of the technology held by the NVIDIA. This was March 18th. And BOJ policy change was also announced that March 19th. It's a coincidence drives the Nikkei 225 more attractive for foreign investors. I also have to say that the Nikkei 225 is cherry picking index of the winning stocks. So I think that it's not fair index of the representative of the Japanese market. So let's move on to what happened in monetary policy. So we're starting about the politics and the current cabinet approval of current cabinet is decreasing trend. It's in 1984, it's tapped to the record lowest in the March 2024, and it's in the danger level. The approval is very strong, and LDP approval is also decreasing trend, almost 30%, and in March the record lowest. So we are very afraid of the political fluctuation. Before the second Abe cabinet have started in 2020, 2012, there was a lot of cabinet changes, and Japanese Japanese stock market will also perform well in this period. So with so yes, so we afraid of what having this kind of the raw approval will affect the stock price or not. Actually, I think it's not to affect the stock price because already Liberal Democratic Party is losing support, but politically stable. Let's move on. Let's see. This is the census uh, taken by the Nippon Hoso Kyokai NHK. This is broadcaster of the national broadcaster of Japan. But this is census. Majority of the voters think not support any party. I'm not sure about what I have to follow. This is kind of the indifference or ignorance to the politics. And but however, the constituent of the lower house and upper house, the Shugin, the lower house and the upper house is Sangin. We see that the majority of the seat dominated by the Liberal Democratic Party or LDP. And New Komeito is a coalition party of the LDP, sorry. And this tag is empowered notification. So, and the problem in Japanese politics is that there's so many political parties and scattered in the seat. So why the political party in charge strong in the consensus in the and taking the cabinet for a long time, taking the cabinet and coalition in a long time. So we see that we see that the end of the excess monetary easing framework. And on March 19th, 2024, Kazuo Ueda, the governor of the BOJ, announced the end of the negative interest rate policy and also about the YCC framework, yield curve control. So negative interest rate on excess reserve will return to 0 to 0.3% range. I will explain later. And the end of the ETF, the lead purchase. And in the quantitative easing framework, BOJ purchased the ETF and real estate investment trust for accelerate the quantitative easing. But it is suspected price keeping operation. But it will also end. And the question is when dispose these assets with no maturities. And also the possible further raise of interest rates suggested but not scheduled. And we see that quantitative easing condition still continues until that until the weather Kazos say that the more clear evidence of the deflation will stop in the Japanese market. In current situation, in the 2 years, the GDP deflated on CPI above 2% and on YOY term, and it's apparently in an inflation economy. But we see, but whether Kazuo still think that it's still talking that it's possible in a deflationary condition. So this is the BOJ reserve transition. This is the BOJ reserve is the bank account of the financial institution in Japan to the account of BOJ. When the BOJ purchased any asset from the bank, the amount of the money is deposited in the BOJ current account. So, and if the BOJ purchase the JGB and deposit in the current account, be applied to the BOJ pay interest to the deposit. But after the 2026, 2016, the negative interest rate applied to, and there's the first data were divided into three parts. The, the blue part is the constant amount. This is the policy rate applied as 0.1 percentage. The rate is applied in the orange zone. This and only the less than 10 percentage of the current on the green zone is a negative rate applied. Almost 50 trillion reserve is in the BOJ account, and if the negative rate stop, we have to pay. BOJ have to pay a policy interest rate to all of these accounts. Is it possible? It may be possible for the current on 2-digit percentage point of percentage interest rate. But if BOJ have to apply for policy rate like 1 or 3% more faster, it will be burden for the interest payment burden for BOJ, and we turn to translate into the fiscal burden for Japanese government. So, what the riddle is that why JGB weakened even though the positive rate applied, and the YCC also stopped. YCC framework also stopped. But the suggested JGB purchase of the in March 90s was next quarter from April to June. The amount of the purchase suggested is almost same to the last quarter. So it seemed that the policy framework ends, but what they want to do is almost same. It seems like they try to change, try to manipulate the interest rate with no explicit targeting. So difficulty of partial rating of policy rate is that the behind reason is that 70% domestic mortgage loan are flexible rate. So the rate of interest rate policy, the BOJ prime rate also may cause interest rate burden for the household. Drop of collateralized residence assets by interest rate may worsen a balance sheet of financial institutions. So it can be the weakness of the financial system of Japan. The rate of rate also increased the interest burden of government fiscal deficit, with more than 2.5 times Japanese GDP. So the policy summary is that in current condition, government support low but political stable because of the lack of public interest. The short-term issue was inflation. And for social security reform, tax reform is important. Regulatory efficiency is also important to follow. And this such a generation income disparity is made from the low birth rate and the social security system to much protection for the for elderly people. It's has to shrink fiscal deficit and stable debt. So the end of low rate and starts QT is BOJ short-term issue. A long-term issue should also be a shrinkage, policy predictability, and rule-based monetary policy, and central bank independence is also have to follow. So in abandoning the YCC and the negative interest rate, before abandoning this framework, many of the governor and many of the politicians and the cabinet members talking about, commented about the BOJ policy, and they seem, they behave as if they admit the policy changes by some suggesting the power of influence for the BOJ policy. This suggests some BOJ independence is somewhat influenced by the government, and the independence is in endangered. Let's move on to the marketing index and sector return. So we can see that this is the nominal index performance on 12 months. The Nikkei 225 is the second best performance in the last 12 months. It's better than S&P 500. This is the nominal performance is denominated by its currency. So the rated buff and SDI, sorry, it's a lower return for the nominal term. Let's move on to the dollar denominated index performance. Sorry, I omitted SDI and see that the S&P is better than topics and also better than Nikkei. Topics 30 is NKY is Nikkei 225 and TPX is 30 is a 30 stock from topics that choose my topics for the large caps. We see that the yen depreciation is likely to be priced in the Nikkei 255, and also see that almost paralleling the S&P. So the asset return is almost same, but it's still underperforming S&P. So let's see the periodic decomposition of the top each index, and write it. However, we can see that the Nikkei 225 is much better. It's better than the topics the S&P, and topics core 30 is better than the also better than the S&P, and topics and S&P almost the same return in the 1 quarter of 2024, but it's the topics and Nikkei is more riskier than the S&P 500. The Sharpe ratio is very better in the topics and Nikkei 225, but this return is denominated by its currencies. Let's see what's the market cap contribution of the topics to its sectors. This ERP, electric appliances, a pricing instrument, is the vendor. Most of these sector is constituted by the electric devices vendor for semiconductor industries, like it's like in the applied material the US or KA Tenko or the like a Cadence or like a Synopsys. There's a vendor for creating or production of semiconductors, and Japanese market, Japan needs this sector is also the producer of these kind of devices, appliances. IT and services is also the producer of the IT service, and it's the software vendors. And TPEQ, automobile transportation equipment, is the sector that constitutes from the automobile equipment company like Toyota, Nissan, and also Honda. The wholesales and trade is the company constitutes of the trading company like Mitsubishi, Mitsui, Itochu, and like that. Let's see the sector return. In 2024, first quarter of 2024, automobile transportation was the best performer, and the bank is also the second best performer. This is driven by the abandonment stop for the BOJ net interest rate policy. Even the financial condition is back to the before the interest rate policy before net interest policy applied, and this is also a quantitative easing period, and the policy rate is also low, and there is scarcity of the JDB liquidity, but but each bank raised the interest rate for the deposit, and outlook is somewhat better than the negative interest rate applied. Yeah, research sector is also increased. The worst performer is the transportation and logistics. This is one minus 1%. This is because the expectation about the logistics, the the human resource of logistics, scarcity of human resource of the transportation logistics industry.
Hi, Misumi-san.
Hi, what happened?
Sorry. Hi, Misumi-san. We can't hear you for some reason. Can you?
Really? Okay. You can hear?
Yeah, a lot better. Thank you.
Okay, thanks. I'm very sorry
Okay.
for that. Let's see to the
No, it's still very low, the volume.
I'm retired. I'm very sorry for that. Well, I have to be summarize what talking about. The end of the QE, we make this okay. End of the QE, but sorry, but the net interest rate policy ends, but the quantitative easing is still continues, and the faster rate of interest rate is a question and also suspected. So our outlook for interest rate is still low, and capital cost is also low, and there's some difficult and scheduled JGB purchase is also almost no chance in the lower limit of the purchase in the last 3 quarters, as the last 3 quarters. And the difficulty of further raising interest rate is that the 70% basic mortgage loan are flexible rate with collateralized. If the interest rate raise, the many of the households are at risk at the interest burden, and they may sell or change their lending. It can be the faster rate pressure for the interest rates, and also the drop of collateralized residence assets may worsen the BS of the financial institutions. And rising rates also increase the interest burden government of fiscal deficit, which more than 2.5 times Japanese GDP. Behind this, for this kind of reason, it's reasonable to question the applicability of the fast interest rates. So, so the policy issue summary was that for the long-term issue, the shrinkage of budget, the debt, and also BS in the government and BOJ is important. Start of QT and strengthening yen is also a problem. So in government, the start of the tax reform is also crucial for the BOJ. BOJ start the QT and the interest rate is for reduction, for alleviate the fiscal pressure, fiscal burden for the government. The government is the parent is the parent of the BOJ. The BOJ, the government hold the equity of the BOJ, and the BOJ was translated to the government, and if the government, the as the body of the government debt is kind of the credibility, translating the credibility of the JPY, and weakening the weakening of the Japanese yen is maybe a fiscal reason. So try to make the faster interest rate, try to apply the faster interest rate than QT. The government have to take in a tax reform, but its public support law condition makes it difficult for tax reform. So my outlook is that the positive rate. Here when my volume is high, so okay. Sorry. let's move on to the performance of the 12 months. It's the topics and Nikkei is better than S&P, but in the dollar denominated term, the Nikkei and topics are beaten by S&P. So the dollar, so we can see that the yen depreciation is priced, and we have to care about the better performance in the Nikkei topics. In the performance decomposition, the average return its domestic currency denominated return is better than S&P in topics and Nikkei, but it's riskier than the S&P 500. This can tell the Japanese asset is riskier than the Singapore stock market and US stock market. Resident sector contribution was largest contributor was electric appliances, precision instruments. This is related to the semiconductor industries, and in last quarter, IT and services are the best contributor in this topics, but it changed the order. So we can see that the electric appliances performance well than the other side. Well, and its market capitalization is bigger than the other one. And what's best sector performance in the last quarter? Is the automobile transportation equipment, but it's better. Is the best performer. Banking is also good performer, driven by the end of the net interest rate, and also the worst performer is transportation logistics. And this is because of the scarcity of the human resource in these sectors. Pharmaceutical is all low performers. So sector correlation in each sector. The sector correlation turned to be strong for almost 58 combinations out of 136 combinations. So, and the low correlation found over 10 and 136. It seemed that the betas are increased in its stocks, and they also correlate each others. And they also see that the machinery, IT service, raw material, and chemicals, and these are strongly related to the semiconductor industries. Commercial wholesales, automobile and transportation equipment are highly correlated with the electric appliances, the precision instruments. And bank, energy, and gas could work as good diversifiers at average 0.4 correlation with other sectors. Okay. How Nikkei 225 different from topics? I discussed it that Nikkei is merely a winning stock, cherry picker or a winning stock. We see that this is for index weights of its stock, and this is upper 10 companies of the Nikkei constituent. See that the first retailing almost 10% constituent, almost 10%. Tokyo Electron also a bigger YTD return was 64.80%. Advantage also dominated almost 5%. SoftBank, if it's the holder of the ARM Holdings, also showed a YTD return of 48.38%. And CS Chemical was also 2%. Even though in the tip topics, there is almost around 1%, and this is a market cap weighted. So this we can see that it is Nikkei 225 cherry picking the best performance in the current situation. So let's move on to the performance evaluation of the rest my model portfolios. Model portfolio was these eight stock with try to diversify the risk of the risk diversification and also exploit the superior return of the better than the index and choose eight stocks that less correlated with each other and also have prospective return. And in the end, the social next is the best performer, almost 70% even in the 1 quarters. And Alban test is second best and with spectacular 50% return even in the 3 months. Denko Kosho is tactical holdings for the diversifying the risk as a this is excluding bank or non-bank finance sectors. Capcom is also a good performance. Plus, self consulting is a double-digit minus negative return, and Pepsi Dream is also negative return because of its pharmaceutical companies. Pretty complicated. It's construction material company, but but it's also related to the semiconductor industry for grinding of the dicing, grinding of the silicons, and also for some kind of liquid materials for the semiconductor industries. CS Chemical is the world global largest supplier of the silicon materials. Also, it shows a great return of the 17%. Portfolio return is that we the allocate the unit purchase for this kind for 200 unit stock for the social next 100 for Almaty Denko Kosho and for taking much weights on the Pepsi Dream so that almost equals weights for the companies. The Capcom is also but for the Capcom is having more portfolio weight, but the rest of them were almost 10%. This purchase was 4.8 million JPY, and then turned to the 5 or 6 million JPY. It's very spectacular return, but right and diversification in 1 quarter 2024. This is you see that only the Almonte and Fujimi show the 0.5 correlation and the 0.5 correlation and most of them were below them. We see that the sector diversification is very successful in last quarter. However, the risk mitigation is not better than the topics. Both risk is 25%, and bigger than estimated. Port return is very spectacular, 64% if annualized. We see that the 60% return annualized in the 4 quarter means a 46%. If we apply to this calculation in the topics return, it can be a 65 returns. It's very better. It's very good, but let's see comparing to the return versus risk metrics. The portfolio 2.6 shelf ratio is also spectacular, but the topics is much better than 5 shelf ratios. And let's see. Sorry, I still try to improve my voice. Let's sorry, try to move on to the sorry. Access. Sorry, I can do that. Where this is. Well, I, oh my gosh. Well, I don't know what happened. Almost same devices. Oh, this, I think that it's improved. Well, good. I'm sorry. No qualify from your stock. Yes, that's only to, okay. Let's move on to the work as good diversifier. In semiconductor industry is a source of risk. As so overall assessment, them activity return almost equivalent but below topics. Social next advantage growth driver. Then cautious work as good diversifier. A risk semiconductor industry is a source of risk more than index. Well, investment goal is that the investment goal is that achieving investment suitability that can be applicable for the foreign investor and Singapore residents, or diverse portfolio to mitigate risk. Long-term investment return beating index, return risk efficiency at least 1.0 sharp ratio. In our investment universe, that English disclosure availability is most important. Simultaneous financial results and material info other than the financial disclosure is available in the same day. Tradable scale and affordable unit price were 30 billion JPY market cap, unit price under 1 million JPY. Profitability and capital return is important. Gross profit margin 30%, operating profit margin 20%. ROIC and weighted average cost of capital spread more than 5% is an optional one. And also budget 5 million JPY, discretionary but almost equal allocation. No rebalance, keep initial purchase. No short sales and leverage purchases. So, but I have to say that okay. Another consideration that the multiple analyst coverage is available at least 3, and lower of Bloomberg median return and the Bloomberg target return cannot exceed around 5%. Is and also absolute value of return by lower target price cannot exceed the sorry, it's almost same one. Attractive cumulative average growth rate of revenue over 5 years. Ideally, it's more than double digit. Sector diversification is preferred. So I have to modify the first quarter model portfolio because no longer feasible in the 5 million budget. So, and also value growth driver on the social next YTD return is 80% on April 15th. So narrow upside while downside risk taking. So I decided to add the Renaissance and any color. And the decision was that the social next plus other consulting is also performed double this negative return in last quarters. But I have to say that I don't have the negative outlook for these two companies. Social Next is one of the very unique public spender of the Japanese public spenders, and also have cross connection with the Arm Holdings and TSMC. I also now try to make the most tinier advanced node of the advanced chip of the tinier node less than 2 nanometers. So their expectation is too high, and also price too much, and narrow perspective on last 9 months, but it can be a better perspective for next 3 or 5 years. So if you already have this kind of this social next, I think that is better to keep. But if you try to purchase more of the stock, you have to choose another. If you newly invest in Japanese stock market, I rather recommend to Renesas. So let's see what is Renesas. This is a chip vendor of the microcomputer, MCU and MPU. MCU is almost more a simple one, and NPU is more complex one, and they always use the ARM architectures and analog devices and power chip for the automobile telecommunication and the electric appliances of the housekeeping. There's a winning combination offered by the Research. There's a full lineup, and the Research is also grows by the M&A and try to make the full lineup of these combination of products, and also crucial for the solution of the automobile for the auto driving and the assistance of the auto driving. A potential key player for the edge AI. There's the endpoint AI for the auto driving and auto driving assistance. And product portfolio similar to Social Next. The Social Next also have a similar portfolio of the products, but for inventory management is superior with shorter days on inventory or hands, around 100 days on hands. This is and their product. This is a key performance indicator of the Renaissance, even while the Social Next have the daily inventory on hand on 132 days on average, because Social Next has some same finished products for like photomask and electrical for creating the chips. They offer a custom chip, and some of the custom chip are some trials, and not creating the profits, and also having the inventory holding days getting longer. And also it means that the cash management is stricter than Renaissance, and it's difficult to exploit more depth servicing, and the financial policy is less aggressive than Renaissance. So I choose Renaissance for newly applied stock with similar kind of fields. We see that there's attractive gross margin and operating margin, and also gain the dividend paying company, and also great return for, also room for the returns. Anycolor is a show business production company for VTubers with the battle YouTuber. This is newly IPO'd in June 2022. The sales growth is very attractive, 133%. And also its financial is very attractive. ROE is 68% and ROIC is 56%. Potential key player with, please ignore this. It's not the one that I'm talking about. And its growth, this is financials of the company. And we see that the very attractive gross profit and operating profit. Let's see its perspective. Renaissance is in the April 1st price is 2068 plus 8, 680, and it's time to be 98.4% in Bloomberg target, lower of the Bloomberg target price or Bloomberg median price. This row is the target price row, and the target return is almost double digit on average. 50 Dream show a negative return in last quarter, but it's still attractive, and it's a very prospective ventures of the pharmaceuticals. Capcom, high minus low is a high minus low return is it means that the highest targeted return minus lowest return exceeding the lowest target return exceeds the highest return. This is exception for our investment criteria, but I see it's still prospective for exporting the Japanese game contents. Let's move on to see the fundamentals of this stock. Each stock, gross margin is almost most of the gross margin over 50 or 40%, and the operating margin is about 20%. And Zenko Kosho is for its business model, no gross profit margin, but operating margin is very attractive, or 80%. ROIC spread is very small, and sales growth max for year is fewer single digit and not spectacular. But this is a tactical holdings for diversifying the risk, and also rest and see peptide any color is spectacular sales growth, and ROIC spread is very good. Renesas is sorry for the relative ROIC spread, and it is also exception on our investment criteria. However, this is because of its capital cost is higher than the ROIC. It's 30.4% ROIC. Current ROIC of the quarterly result is 60%. It's bet in making a ROIC spread. So it's to remains as, and also in current situation, the market correlation is increasing, and also it's also capital cost is rising. So I lack some condition for applying the Renaissance. Diversification on the portfolio generation second is that the Anicara can work as a diversifier of the risk. See that almost 0.1 correlation with other sectors is better than the last quarter of the it's last quarter of the Plus Alpha Consulting. Research is increased the risk, but it's mitigated by Anicaras. Let's see on the portfolio construction. I taking it purchase of 300 Renaissance stock at the April 1st unit price, and also taking 400 stock on any colors. There's a 90% portfolio weights on any color, and Fujimi less on the Fujimi and Pepsi Dream, and more on the Advantage and the CS Chemical because their price increase. So the initial investment is 4.8 million, but if the 12 months target apply the 12 months target price, this is the lower of the target price of Bloomberg or median price of the Bloomberg target price. The 12 months investment value is like that. It turned out to be the 6.1 million JPY. A risk return metric is historical perspective with a port risk last 3 months back test at the same period was 25 port risks, and return is 24%. Sharp ratio is under 1.0, but next 12 months target simulation with they're using the portfolio risk with 12 months back test, but the port return applying the target price can be at 27%. The Sharp ratio is up at 1.05. I hope that it will be better than topics and also better than the historical price. Let's see the conclusion. BOJ terminated excessive policy framework, but continuing QE. First raise of the interest rate is uncertain and also questioned. NVIDIA's outlook is a key driver of Japanese semiconductor industries, and their main contribution, and our main contribution is the production of devices and materials. So it's difficult to see the software contribution of Japanese semiconductor industries like CUDE and also large language model applications of killer softwares. It's difficult to see. We also have to see that its production contribution of the Japanese companies. Japan economy is inflationary and JPY weakened. So in this condition, margin and capital returns are important to measure bargaining power companies. If the company have bargaining power, they can earn margins. And if inflation continues and JPY weaken, but if the bargaining power is strong, they can compensate by the price increase and also margin increase, or margin constant or continuous or keep rising. Okay, thanks so much for listening. This is all I have to talking about. Let's move on to the questions. Why Sony 206 why Sony is not qualified from your stock pick list? I have to say that well, yes, in my screening condition, the Sony may be omitted because of the low capital return, and also the margin may not reach to the 60%. Wait, with some financial reason. And Sony is also a notorious stock for the kind of the notorious for conglomerate discount, and also for so many also for production schedule is also production schedule is also for conservative. And like you remember that the Sony is a producer on the PS5, and this scarcity of the production is made by the maybe from the it's pro conservatism of the production schedule. And why you don't share this the other link offshores? Oh, sorry, what do you talking about? What's kind of the link offshore? I see you well, in my BOJ data, I download the BOJ data and try to change them into the diagram or some graphs that for for improving the visuals. So I don't make the rings, but if I try to distribute my slides, I add a link for them. Do you have any questions? Okay. What is investment statistics of the what impact on the investment statistics of finance, FIA and QIB outside Japan in last 12 months or 24 months? What impact on JPY? I'm sorry, what's the abbreviation of FII and QIB outside Japan? But what is FII and QIB? Sorry. Do you have Mr. Venkatesh Narayan? Please specify what is FIA and QIB. What is the impact of Sony partnership in TSM in Japan? Well, I think that well, the Sony is already have some factory of the TSR in Kumamoto, and I think that their collaboration is also applicable for the Sony and also for other chip vendors in Japan. But what is the prediction of the rate hikes? Won't the rate hikes because give higher cost for company to do business? I think that a company with a high margin can continue its bids, and also and but I think that the rate hike is difficult for more than digit percentage is difficult because there's a the burden for government also if because the BOJ reserve is so huge, and paying interest for them is one kind of the subsidiary for them by using a tax, and it's so advantageous for particular industries, and this is unfair. The QT is the first, and then rate hikes more than 1% or more 1 or 2% is applicable if the QT start or this QT starts. Thank you. For institutional investor, qualified institutional buyers. Oh, well, for institutional investors, I think that for the foreign institutional investors, there's still, as for foreign investors, there's some company that have there's a company for not having a strong not having a fair English disclosure, but now TSE shows a sort of attitude to foster more better English disclosure for these companies, and this can be the information change for the domestic for the retail investor of the foreign retail investor, and it can be a price impact for them. And some of the foreign institutional investor having the Japanese proficiency and having the holding a company that don't have a good English disclosure, which will be change and positive impact because after they make this more better English disclosure. Thank you so much.
Okay, wonderful. Thank you so much, Misumi, for the presentation and interactive Q&A. We have now come to the end of the webinar, and we would like to thank you all for joining. For tomorrow, we will have our last but not least session covering the Singaporean market happening from 10 a.m. to 12 p.m. Remember to mark your calendars. It's from 10 a.m. to 12 p.m. For the session just now, we will be uploading the recording on PhillipCapital's YouTube channel. You may view the recording of the webinar on your own time. Also, we have many other interesting webinars going on almost every other day. You may view our full list of free webinars on our website. Do take your time to fill in the survey so we can improve your experience with us in the future. You may scan the QR code on the screen. You may also join our investing communities to get free access to full research reports and discussion on technical analysis. Once again, thank you all for joining us, and we hope to see you tomorrow. Tomorrow, we will have our most popular market, Singapore market, happening from 10 a.m. to 12 p.m. Stay tuned, take care, and have a nice day. Thank you.